Hey, it's Mark from Stock Pursuit and Dynamite Stocks and my Substack. And maybe you found me on the Twitter account too. So I just wanted to do a video on what I'm going to look at for next week and just some kind of miscellaneous things that I haven't really talked about much or that I haven't talked about in a long time. So kind of let's just start with the miscellaneous things. So I look at a lot of ETFs and I'm always trying to find things that are sort of uncorrelated to the market and like lower beta. And there's a lot of like income and dividend ETFs out there that are good. I've done blog posts on those in the past. And this one that I've talked about in the past too is ARB. It's an ETF and it's just a merger and acquisition ETF. So they buy they buy stock for the mergers that are going on, and so there's going to be some turnover, but the expense ratio wasn't crazy the last time I looked, but we can just look at some of the key fundamentals here real quick. So one of the things I like is I usually like to see like a pretty good track record on an ETF. The longer the better. This one goes back about 3 years, which isn't bad, and it's done really well the whole time. So if we just look at the history, it's back in 2020, it was up a lot in 2020, and well, actually, it had finished a little bit on the down on the year in December, but it had some pretty good runs in 2020, and it's just slowly uptrending since 2021, and it did okay in 2022. Considering I think what the market did and a lot of ETFs did, it was actually up a good bit through the fall. In October, it was up. It was up, a point or two. Of course, it's not very volatile, and that's kind of what you like. I like to see it in stuff that I invest in. I just don't want to. I kind of like to find things that are outside of the scope of the market. I don't, if it's going to be up and down 50%, then I might as well just be in the stocks. So this one's had a really good performance this year. I mean, it's up considerably. For it, it's up from like $25 to 27, roughly a share, and the technicals were good on it too. It broke out some levels there, but it's mostly just kind of like a diversification play for me. That's why I see it where it's best, just for sort of a little bit more diversification away from the traditional stocks and bonds and commodities and stuff like that. So it's pretty untraditional, even though merger arb in special situations are a really profitable strategy over the long run. And Warren Buffett really started his partnership just doing special situations and merger acquisition, workouts, like any kind of thing where going private transactions. So there's a lot of stuff that people aren't aware of that allow you to diversify away from just a S&P 500 fund or something like that. So there's potential to get positive gains when the market's down. So this one's it's a little it's the beta is not really high, but it's a good it's a good thing, I think, to have some good diversification other than just stocks and bonds. So I was looking at the holdings, and looks like they've got the top 5 holdings are about 31% of their assets. and it's fairly diversified. Like 6% is the top. 6% is about one of the top names here, and a lot of them are 6%. So it's not super concentrated, 10% or more. Even though it's not super diversified, it's not very it's definitely not a bad thing the way it's diversified here. So this is one of the things that I've kind of been had on my radar, and I watch it. And let's go ahead and look at some of the indices because I haven't looked at like the S&P 500 in a while. So let's see what it's doing. So we had a move right on that breakout level there, and we broke out and failed to hold, at least so far. So it definitely didn't like the breakout area, but it's still in an uptrend. Like it's making higher lows. Like that was a consolidation, even if it was, hardly one. It was just sideways. But if it goes below here, then the bulls are in trouble because it's lost momentum. But it's still uptrending, so it very well could break through again. We just gotta see. And the way things have kind of just slowly sold off here doesn't make me particularly worried about the up momentum. The bullish momentum. Like even the Russell had like a pretty big down day the other day, but it's not really super volatile. Same with the Nasdaq. It's pretty calm, on these sell-off days. It's even like slowed down a bit here, but we'll see what happens, with the markets. But I'm just gonna keep watching healthcare, because I think healthcare right now has the most potential. When you look at these sector ETFs, this healthcare ETF, VHT is still right near the highs. It's right off those levels. It hasn't really had a major pullback like the other ones have, or a decent pullback. It's got that trend support right there. So I'm still really just focused on these biotech and medical devices and pharmaceuticals. Like I'm just gonna keep watching those next week. Sometimes on Monday you can kind of see what the direction is going to be. Like a lot of times I've seen Monday sort of be a sort of litmus, like a indication of what's going to happen the rest of the week. That's kind of how I would go into a week. I would just see what happened on Monday and not really commit until Monday's closes, But I just did a Twitter post on this stock here. It's a luxury brands company, and they've got some really big fashion brands, and they're getting bought out for $57 a share. And that was announced months ago, like a long time ago, and the stock was up to about 55 on that news, but it sold off a lot. And there's always a lot of skepticism if the deals are going to go through, but a lot of times these big mergers, they do go through. And I think the SEC and the FTC apparently is in this one too, and sometimes I think they made some bad decisions, and they may want to just get this one through because they they don't always approve everything, but I think this one has a good shot of going through because it's an all cash deal too. So that's good. Because there was some, like one of the articles said that there was some problem with their purchasing company Tapestry, but I mean, so what? Like I don't think that's going to be a big deal. Tapestry has a bad quarter or something. It's not going to stop the deal. And I mean, it looks like they both wanted to get it done too. So it's just up to the regulators. So it's a 12% spread right now. The the spread between 50, it's like 50 69 according to my last close on Friday, and 57 is the buyout. So it's about 12% return. And from all of my reading and research over the years, if you can get 20% or 30%, that's pretty good and what you would strive for, when you're finding a deal. So I was gonna watch it. I mean, I was gonna watch it and see if it went lower, but it just keeps uptrending. So I just found out about this like a couple days ago. Um, so this one's interesting. Of course, it'd be better if the market drops a lot and it gets down to like 40 bucks a share or something, and the spread's a lot bigger. But there's still a decent spread there. I'm not sure if Capri has options, but it very well makes. I think it's a big company, so there might even be some opportunity with the options. So that's that one. Those are the kind of miscellaneous things. So let's just look at some more charts here. I mean, I'm really just gonna focus on these biotech. If I'm making a trades Monday, but definitely for the rest of the week. I mean, I pretty much loaded my watch list up with these biotechs now, and they still got some really good charts. And my NO calls are doing pretty good. I mean, the stock's up. Like I found this one back on that day, on the 26th. I added it to my biotech watch list, and I put it on Twitter that day, and it's just been pretty good. Because I get the $1 strike calls, which is pretty ambitious, but this stock, if it goes, it goes. So it's gonna go, it looks like. And the other one I put a post out the other day too was the RWLK. This one's actually a medical device company. I thought it was just some kind of just like a robotics company, but when I put it, because I had it on an old watch list that I made like 6 months ago, but I looked at it again and it's a device company, so I added it. I put a post out on Twitter before that run on Friday. So this one's still going too, and it was really strong on Friday too, even though a lot of things weren't. So that's pretty interesting, that it had a really, really good day on Friday. I think it was up like 20% at the close. So it's got a really good chart too. It broke out of that trading range there. It's got a lot of upside here. There's a level back here at in the mid twos. I think that's going to be a big level. So, and if you look at, even goes back to here, there's somewhat of a level at like 220, 225, 230, but looks like the big level's right here. It's right at about 250 to 260, about 260 I'd say. Or is it down there? It is, yeah, about 250 to 260. So this thing very well could go to 260 if it gets momentum. And there definitely are some tempting looking short setups. Like, I was thinking a lot about Google because I have been following a lot of the news flow with the tech industry lately. Like, the ones that with these LLMs that are, you know, growing revenue a lot, and they're just gonna keep growing. You know, some of these tech companies are just getting started. I think maybe even, you know, Nvidia. I don't think Nvidia's even done yet with the way the spending's gone for tech lately. So bots is still one that I like. If somebody asked me what my favorite, you know, way to play AI is, I mean, bots is still really good. Robo. I think bots has always been been my favorite, and chat's like a newer one, and I've had some correspondence with the portfolio manager of this one, and he's a really smart guy, really smart, and he's very enthralled in the tech industry, in the news, and because this one's actively managed, so that's good to see that he's a real tech guy. So I like this one too. I mean, the bots has a longer track record, so that's why I would pick it as my favorite. But I think the chat's actually my second favorite, even over Robo, because Robo is not really like a pure play on AI. It's like a lot of kind of older, you know, big conglomerates. So I like bots and chat for the way to play AI. And I think a lot of the big tech companies are gonna really benefit from AI. I mean, even smaller ones too, but we don't know exactly what those are gonna be yet. But I've been following that just in case some of them do IPOs. But when that time comes up, you know, I'll you know, let people know about that. But in the meantime, yeah, I'm just gonna focus on healthcare a lot for next week and see what that sector does. But yeah, I was talking about the short setups like Google. Like a lot of people still think Google's gonna be one of the losers from, you know, this new AI tech once it becomes mainstream. Like it's still not mainstream, and you know, I'm kind of a rarity. I think I'm one of those people that's been trying out all the new LLMs and the new, you know, search engines and stuff. Like I don't even use Google. I don't use Google if I want to get a really good search, or I just need something really quick. I just do Perplexity AI, and Perplexity, it has sources too, but it's just a lot faster to get you what you need. You know, to click on, you know, 20 links, or you know, keep trying to change your search because of all the junk ads, you know, that Google has now. You know, there's just a lot of ads, and if you're gonna search, you know, the internet, if you're gonna search, you got there's a lot of cookie pop-ups and pop-up windows on every site now that, you know, do you want to accept all cookies, or do you know, and it's just really annoying and aggravating, and it's not what search used to be, and to me, it's not. If there's an alternative, you know, I'm gonna take the alternative other than, you know, being inundated with pop-ups and having to scroll through ads a lot and stuff like that. So the Perplexity AI is just far superior for search, and of course Google doesn't have just search, but that's pretty much the search ads is their bread and butter. So it's, you know, they can't afford to lose that, but they very well may, because I haven't really heard much news on the new stuff, like, because they're trying to compete, but they're trying to outcompete these small companies that can move a lot faster. So it just looks bad for Google. And I've kind of been just watching, like, I got a little too rambunctious and bought some puts like a year ago when I found out about this stuff. But you know, it may be a long time until it plays out. But there's a setup now short still, like I talked about in my other video, that if it broke down on Friday, it was a good short, and it is down again. And it's got a down channel sin right now, so it's definitely some short side momentum. I mean, it's got this up channel too, though, so it's got an uptrend. So it's coming right up on this uptrend level right there. But the thing I'm looking at is these resistance levels. Like every time it comes up here, it fails and breaks down, like there. So it's back down again in this channel, up there to down there. So my take is it's a lot more likely to come down to like 127, at least 130, than it is to just start breaking out again. But of course, it's going to depend a lot on what the Nasdaq does, and the Nasdaq's. I mean, everything's not looking super bad. I mean, Apple probably is one of the worst looking ones on the short term here. And last time it did this kind of gap down, it went sideways for a long time, and it's pretty much stuck in a range too. It barely got above the high. It's kind of like the overall market. So it's not looking good either. It's in a downtrend right now. But my hunch is, I think it will be. It may be that the market just goes sideways for the next few months, because a lot of the optimism from last year is kind of sort of things priced in a little bit, and it might take another quarter of earnings, corporate earnings, to see what's going to play out with the companies and see how the consumer is really doing right now. But I think the consumer's not doing bad, so. But I think a lot of things are priced in, so they may just mean we go sideways, I think, for a few months or 6 months. I mean, who knows? But that's kind of what the technicals are playing out too. We're pretty likely to come down to a lot of support levels. But I think healthcare may outperform, and it's kind of like a risk-off thing too. So that thesis kind of works in with my momentum thesis too, because if growth stocks are selling off, then they find safety a lot of times in staples or utilities or healthcare, which is where the revenues are a little more recession resilient, or there's less cyclicality in the revenue. So that's kind of my thesis for of course, for next week, and maybe even for months coming up, for months in advance, out farther here. So, but I think Google may be the weakest of the tech stocks, and it's definitely underperformed a lot of stocks too. Like, I mean, a lot of companies they're really benefiting from AI, like Adobe. Like Adobe had a really good run last year. I mean, it went up a lot. It basically doubled from the summer to December, and it's finally selling off too. And it's coming back down to a trading range too, it looks like. So even some of the best stocks are kind of taking a breather here, and very well may go range bound, or we just go sideways again. So I'm not super excited about a lot of stocks, at least large cap stocks. And I think the obvious trades are gone in a lot of the tech companies. So we can look at one more, like Meta was a really good leader too, and Yeah, so their stock's actually not doing as bad. I mean, that could be a weak bull flag there. So Meta's still doing pretty well, at least the stock wise. It's pretty close to the highs still. And my hunch is that's because they have a good LLM. If you have an LLM, your stock's gonna do well. Like Snap has an LLM too, and I think that might have something to do with why they're up too. And I was saying that for a long time. Like Snap was one of the first ones that incorporated an LLM chatbot in the beginning of the year. So, but I think it's still short-term overbought, and that may play out, but it may take time too. So that's pretty much all I want to talk about. Talked about a lot of stuff there, and those are just my thoughts on what's gonna happen or could happen, and I'll always keep doing some updates, as I see things. Like I'm probably gonna do a post on the BRNS because as a net current asset stock on my Substack, and if I do that, I'll put a link on my Twitter. But check out my Substack too. I have a Substack. It's on my link tree. Like this is my link tree. My link tree is just my stock pursuit handle at the for the tag for the handle. So my Substack is where I just do deep value stocks. That's all I do on here. Nothing else really. I mean, sometimes I'll talk about how sector rotation's gonna affect it, or maybe like a sentence or two on technicals, but it's 99% on fundamentals and like an investing mindset. So yeah, that'll wrap it up there, and I'll catch you in the next video.